Good afternoon, everybody. Welcome to today's event. Today we're going to talk about the evolution of fintech infrastructure. Welcome to you who are here. It's pretty unusual. You can see we're all readapting. We don't understand really much what is happening. We have cameras, but we also have people. That's pretty much a setup we've never had before. So we're all trying to readapt. It's going pretty smooth so far. Today we have a great panel. A very brave panel that is trying this setup and experimenting with us. So to discuss today, we are going to have Martynas Rajunčius. Sorry for the very bad pronunciation, Martynas. Martynas is the advisor to the director of the market infrastructure department at the Bank of Lithuania. We have also with us today Anna Pavlovska, who is the EVP at VIALET, also a member of the association. We have Tadas Češkevičius, country manager at Čapili, also a member of the association. And finally, we will have with us Deividas Olišauskas, who is from Metasite Hyperops, who is a sponsor of the association today. So welcome to all of you. Thanks a lot for being with us today. Thank you to all of you who are being with us here and online. We are going to have pretty much an hour. There is nothing very formal. We'll see how the discussion goes. We'll try to leave some time. We won't try. We will leave some time at the end for a Q&A session. So if you have any question here or online, feel free to just shoot it at us, and we'll try to answer these as best as we can. I guess the first question we have, and that's actually the question we all had when we met each other, is how do you feel being here? How do you feel being in an environment where we actually see each other? And have you been back at the offices in your daily life, each of you? Maybe we can start with you, Martynas.
Yes, hello. It's always still we have we're facing strange times, and it's happy to be here and to see people. Although our trips to Frankfurt are still cancelled, and you miss the social dimension quite a lot. Personally, myself, I am back in the office, but this is like temporarily, and most part of our central bank is working on remote mode. Yeah.
Okay, so you've adapted. Anna, what about you? Back to the office, in between, hybrid mode?
Yeah, thank you very much. First of all, I would like to say that I'm really happy to be here and to be back with the audience and to see the faces and to, socialize right now. In the offices, we really have a multinational fintech. VIALET has few offices in different countries, and during those 2 years, we got used to work from home in a combination with the office. So now we work really partly, so to say 2 days from the office, 3 days from home. And in the office we have all the security measures, so the masks and even tests we have in the office as well. So we are pretty much flexible, and I think that during the next 5 or so years we will be, I would say, used to use this combination of working culture.
Thanks. I think we have a more practical approach to the office, which in my opinion is very good, meaning that we don't go there if we don't need to. We just, adapt. If we need to go, we go. Before we'll just go, and do whatever we need to do. What about you, Tadas? Are you back already as well?
I would say 50-50. I really enjoy working from home, but continuing the thank yous, I want to thank Viva and everyone else for organizing this event and essentially getting us from our pajamas and allowing us to put a shirt on. That's really great, meeting people face-to-face without masks. It's really, really different energy as opposed to just being on a Zoom call. But I definitely agree. There is this question that we have to ask ourselves, why we have to go to the office, as you said. It's not just go to the office. We have to find out ways, whether it's a social event, it's a pastry day, it's collaboratory day, it's a brainstorm session. We have to find those reasons why we go. And I think it's going to be an interesting time to find out those answers.
Right. Deividas?
Yeah, as a company, we are also back in the office. We are fully vaccinated, so we have no problems and no fears anymore. It's good to be back, but as a company, we always had a possibility to work from anywhere we like, just to get the job done. That's the most important part. And I'm very also glad to be here with all of you and have this panel discussion. It's really great to be back and to be face-to-face with people.
Indeed, I have to say I have to readapt myself to the social interaction, and I realize I'm not good at it anymore. It's like baby steps, again and again, rather than talking to Zoom, and just accepting someone in a meeting. Anyway, it's good indeed. So despite that, despite these changes in terms of our office life, these practical changes, what have you been noticing within your company in terms of changes during the pandemic, either because you were obligated or because just different behavior pushed you to change it? Maybe, Deividas, we can start with you.
Can you repeat the question?
What other changes, other than just not going to the office, have you noticed within your company due to the pandemic?
I myself noticed that I now usually try to get an online meeting. Before the COVID situation, in 9 from 10 meetings, I went to the office of a client, meet face-to-face, talk about the stuff. But as you all know, the travel time takes a lot of time off your work day, and it's a waste of time usually. So after the COVID, I see that the benefit of online meetings, it saves the time. They are more concrete and are more beneficial for myself, for predicting the time, and for the clients also.
Yeah, I agree with that. I think in terms of efficiency, we've all figured out that it was much better. Travel time, well, even the meeting time, you don't extend it much usually. You rather cut it. But I guess at least for me, I realize there is a balance as well to be made with the human part of the meeting, especially with external clients. Have you noticed such changes, Tadas?
Yeah, I noticed that change with clients. Yeah, I agree with you.
Thanks.
Yeah, it's similar to what you mentioned. Like you saw that you have to go digitally to meet your clients.
Yeah.
I think the same thing happened to our customers and consumers. What COVID brought in is this really big adoption of any digital services. People started to shop online more, communicate online more, and pay for things more. So what this made companies to also change is essentially, we have so many people now online. How do we best service them? Because they're spending so much time on the websites, on applications. So the companies have to figure out a way of how to increase, how to make that experience much better than before. So I think it forced the companies to innovate much faster than they used to before. And also, what it changed is since people are spending so much time online, we gather so much data about them, so we can learn much more about their habits and create better services for them. And especially from open banking perspective, the more people create data online, the more we can create more innovative products on that. So for example, when aggregating our online banking transaction data, we can create some interesting products on that. So I think, there's going to be like a snowball effect of what the pandemic brought in, and I think the effects we're going to see like even more years, in the future.
Let's see. Future will tell, indeed.
Yeah.
Anna, any particular changes or evolution that you've noticed within your organization?
Yes, first of all, in the market, there are new jobs like the controller of the distant working. And me personally, I have been approached by several fintechs. How do we do that in our company? How do we actually create the control of people, what they are doing at their homes, that they are working or on the workation? And this becomes quite challenging because it's new, and you have to understand what KPIs you have to set and how to control at the end of the day. So now it becomes not more working hours counting, but the results. If you have the real result of the work, so you have to set those KPIs based on that result. And also, just to add what my colleague said, the digital marketing is very important nowadays because, we have a lot of people consuming and, just scrolling online. And we have a lot of data then, what they do, what they wish to do, what are the changes in their habits. And with this data, together with AI or machine learning, we can not only just understand what they wish, but also in some places to make prognosis or to model their habits in order to turn to a certain point and to create those products which will be the most suitable in the next steps in the next year or two. So that's what I have noticed as well. And this digital marketing, which was before, bots in the apps and which gather information, then send information. So they were used in retail, but nowadays they are very much applicable to fintech sector as well.
So we have much more information to actually propose tailor-made offering to our user.
Yes.
Than before.
Yeah.
Back to what you mentioned regarding the, I don't like this word, not tracking, but the way you work with your staff remotely. It's very interesting to see that there are very different approaches. There are the companies that are willing to really track the activity. Are you on your computer right now? When are your peak of activity? Are you actually here and where you say at the moment where you say it? And there are the companies which are setting KPIs and are just trusting their employee as long as these are achieved, which is my preferred approach, by the way. But it's very interesting to see in which direction we're going. Obviously, I believe it's more difficult for a large organization that is smaller, maybe like ours, but it says a lot. Martynas as well, just to bounce back on what we've said, indeed, we've heard a lot about the fact that for us, fintech, the pandemic has just brought incredible opportunities. Obviously, it is now difficult or impossible to visit a branch. Obviously, people are pushed to stay at home to use remote financial services. How do you see that from the central bank point of view in terms of usage of the infrastructure evolution, and maybe also to reflect on what we just said regarding the use of Centralink and the fact that there was so much demand that we could not cope with it? Where do you see that going?
It's still, demand still exists, and we have very big traction, and so the number of entities and the volumes are still on the rise, although it's during this pandemic time. So we were beating records, as you read last year, and the data is increasing this year further. So we're very happy to see, and it really shows what fintechs and banks digitally were quite strong, and financial services were not interrupted, and really good example for the rest of the economy during pandemic times. So from this point of view, it's right direction, and we should further go and try to get more digital finance services created, and we really will be supporting further fintechs, and we'll find ways to create maybe new opportunities and find new ways of collaboration.
Thanks. So far, it's working rather well.
Sometimes we're also having incidents. So
yes, we know that too. So just if we build a little bridge from the infrastructure to the payment infrastructure, the core banking services, there is another interesting question, and we drift a bit from the COVID-only related question. It's a question I hear a lot at the moment. It's a question I hear a lot from early startup, but also a bit more mature one as to how to deal with internalization versus externalization when it comes to your payment infrastructure, when it comes to your core banking service. There are lots of pluses and minuses, but I guess but I guess when you started, it's a question which is very important. So if you had a tip for these guys that are asking themselves this question, an early startup in the fintech ecosystem, what would you say are the pros and cons? Maybe starting with you, Anna.
Yeah, thank you, Alex. So actually, I have read a recent research of the fintechs, European fintechs, and it said that almost 20% of the all fintechs budgeting goes to the outsourced services. And they outsource also the startups and those mature companies. And the more mature company is, the more specific services it outsources. So for the startup, there are actually two reasons why to outsource some services. First is that you do not have enough staff and knowledge, and you have to rely on professionals in the market. Like, let's say, the core banking is outsourced by almost 50% of the fintechs. And luckily, here in Lithuania, we have plenty of those core system providers like Forbis, like Mambu, like BAS, and they all have pluses and minuses. Also, other companies like Paysera or Revolut, they have internal, in-house core banking systems, and they cope with them as well very well. So the second reason is why the companies outsource is just the acceleration time to market. If you have to speed up the process, so then you rely on the already created solution and you take it. So the more mature a company is, by the statistics, it outsources more specific companies, not the general one all in the pocket. And again, if we go to the AML tools, 100% of fintechs outsource that. I mean, there are certain rules or typologies, created in-house, but in general, what concerns goes to the, let's say, transactions monitoring. So again, we have companies like Sentinels, they offer quite good solutions, and others. But in this case, I do not know any of a fintech which does everything with ML in-house. So that's, I would say, the main tips for that.
Thanks. Yeah, AML CFT is rather heavy and tough to internalize indeed. Some are doing it. Whether it's the good solution or not, I don't know, but some are doing it.
But also, if to mention as well, the cards, let's say, issuing and acquiring, almost 70% of the fintechs go via third-party providers, not directly to MasterCard or Visa or UnionPay. So it's kind of outsourcing as well. The processing of the card, because not many core banking systems can arrange that. So you, again, go to the specific provider in order to gain this very good, high-quality service of the cards issuing or acquiring.
Yeah, it's a whole area of expertise that it is by nature very difficult to master. Yeah. What about you, Tadas? Are you yourself, have you been designing your own infrastructure? Are you relying on partners for that?
So we are an open banking infrastructure provider. And I think as such, we prefer to build things in-house simply because we are selling the actual infrastructure. But I think for our customers who focus more on the customer experience and on the product side, they can leave all the hassle of the infrastructure. For example, for us, I think the same goes for all infrastructure providers. Because a startup, they usually have, especially in the beginning, they have a very limited budget. So they have to make smart decisions of where they're going to focus their efforts and where they're going to focus their funds. So I think if we talk about just infrastructure, the amount of time it would take for them just to experiment on the idea and just to test it out in an agile environment, it just doesn't, it doesn't make sense.
So you made the mistakes already, and you're here for that.
Yeah, we make all the mistakes. We work through the process. The customers leave the hassle for us, but they can then focus on the actual product. For example, if we have the infrastructure, we integrate already with thousands of banks. So for our customers to do exactly the same, which would take a lot of time. But instead of focusing on building infrastructure, they can start building the products, either on lending or investment, and essentially the time to market decreases significantly. So I think, yeah, it depends a lot on the, as Anna mentioned, on the sort of what's the priority. You know, if it's the speed, definitely go with an infrastructure provider, and then probably the maturity of the company as well. As you grow, as you become bigger, as you want to offer more like specialized products, you know, maybe then you can sort of make different decisions.
Thanks. And Deividas, I understand it's a bit of your approach as well, to have some kind of customized box or environment that you tailor for your customer.
Yeah, it's the most common question and most common topic for most of the companies to outsource or not outsource. Most of the benefits Anna and Tadas told already, but the main concern that all these companies that face this question comes is the security part, because we think that it might not be so secure, and the reaction time. Because we think that if we have everything internal, it will be faster when we can come to the next cabinet next door and ask the colleague to do something right now and at the moment. But nowadays, more and more companies see the value of outsourcing, and these concerns about security, when there is regulation of Bank of Lithuania, for example, which segregates these companies which are reliable and which are not reliable, and helps to choose the partner who will bring all the benefits without this, and help to overcome these concerns of the security and the time to market and the fast response times. So I agree with all Anna and Tadas told. Yeah.
So your last point is a very good point, actually. When you come to having to make the decision of selecting your third-party provider in a fintech, so whether it's for payment infrastructure or, and we've just approached it, AML CFT, it's a terrible moment. I mean, it's amazing because you have so much choice compared with even 5 years ago. But what's terrible is like, okay, where do I start doing my benchmark assessment and analysis to make sure that I actually select the one that suits me best, and also filter all those, sorry for those, but all those which are just simply not working, because there are a lot of these in any areas which are not working. So we've been discussing Martynas, and that is something which is very interesting, which is a bit touchy and risky, because it also touches on competition between the private players. When it comes to selecting or clearing third-party provider, when it comes to integration with Centralink, for example, the Bank of Lithuania already provides a list of partners which have the capacity of doing that. I will not say it's an approved list, but do you think it could happen more and more in the fintech ecosystem or in the financial service industry, that the Bank of Lithuania will clear, if not approve, some of the third-party provider versus some others?
Not in the nearest 2 years or so, because first we had the idea originally maybe to do such pre-screening and let's say to have a list of, let's say, approved, but it's really demanding and for us to maintain it. And so what we have a list of possible vendors, and we're trying to be neutral. So we just give big list, and new entrants can choose their partners. And it's now this fintech community is very huge one and striving. So for us, it's it's very hard to combine everything. So we give big list for everyone. But all in all, I mean, what was said before by colleagues, what we see this platformization. And if I would say from my heart that it depends on the company, but if you want to develop a pure payment business, so you need to have as much as possible of core functions inside, I would say. But if you have some different business goals, so you can choose differently. And this platformization, it goes everywhere in retail market and in financial services too. And what we see also the same with payment systems. We could say we have this platformization as a third generation of financial infrastructures, because first one was just providing generic payment services. The second generation, what we have somehow current central link or our current target system of Eurosystem, which provides some additional value-added services for their participants. And what we're now seeing, that it's evolving further, and with third-generation type of platforms, we can see in Scandinavia we have P27 initiatives where commercial banks coming together to create new infrastructure. It's the same with Eurosystem. We're combining Target with T2S. So we have target services for different type of financial services provided by central banks. So what we have already some functions which are now going to in-source from participants, and in the future, with, as you say, very heavy ML and CTF things, why they might be served centrally. And some financial market infrastructures in France or in Spain, we're already doing some checks and giving some notices for their participants. And it's the same here. I mean, basically in central bank, we also setting some plans, some program to, let's say, completely redevelop our central link system and to make it a little bit more platform-like. But this is a little bit mid-long-term plans.
It's a platform approach. It's very interesting what you were mentioning on markets such as France and Spain when it comes to reporting. I guess that's what you may have approached. There is this systematic reporting. So it basically consists for the market participants saying, here are our books. It's an open book for you, the supervisor. You can check whatever transaction you want. You now have the technological capacity of doing that, so that instead of sending you a report about what we may think is suspicious, you, with your own criteria, with the own knowledge of the market, of the trends and risk, you just pick what you deem to be suspicious, and you can do your own analysis, which just runs through the whole market. So it's a lot more information. It also raises a lot of challenges, which we might not approach today because it's a single discussion.
Still early stages. Let's say in France, we do only pre-warning on certain type of transactions. In Spain, we are more advanced, and in Scandinavia, when we will develop fully, it's still initial phases of this initiative. We foresee quite intense data gathering in central platform.
Thanks. So if we stay on this platform approach, this idea of interconnectivity between financial institutions, you've just mentioned that commercial banks were teaming up for specific services provision. Now we see that without too much incitation, fintechs are doing it by themselves. Fintech between themselves connect to each other, provide services to clients of their clients between each other. We see platform aggregating, consolidating many different fintechs. Do you think first that if it continues going at this pace, it might kill the commercial bank or traditional bank, whatever you call them, that are not managing to catch up? Maybe Anna to start with?
Yeah, thank you. So I think if the commercial banks will not adopt those rules of the play right now, so most probably, or perhaps 5 of 10 of them will naturally have to die. And yes, you said exactly the truth that fintechs globally are going to connect into the networks. And let's say I have seen several projects where you have wallet, in which you have wallet into the wallet and wallet-to-wallet payment, wallet-to-wallet connection. In that case, actually you do not need neither bank nor the central bank systems. Nothing, you just combine your own efforts between fintechs. So it is based on technology, it is based on the understanding how the netting of the payments will be done. But on the other hand, what is going on with a good, or positive path, that there is a new concept of the bank which is introduced to the market right now, like specialized bank or neobank. It is still a fintech, but also with a banking license, which again do not limit you to safeguard client funds in the credit institution, and also you are allowed then to participate in in the systems globally. So new trends are like, banks have to think on how quick they are in reaction to the global fintech approach in the market.
Thanks. I think that was pretty much your approach, Tadas. You were saying, if I recall properly, that many fintechs are basically banks in the making.
Yeah.
Is that what you see, the way you see it?
Yeah. Recently in UK, they made this survey. They asked consumers, how likely are you to recommend your current account provider, and essentially the banks. And the results show that, at the top of the results, there were 3 banks, and those were Starling, Monzo, and First Direct. And they were all mobile-only or online-only banks, which started as neobanks, right? So I wouldn't say, to answer directly the question, that fintechs will kill traditional banks. I think they're going to stay, but I think they're going to transform in certain way how the banks operate, in a way how they offer the services, how flexible they are. And second of all, I don't think that the fintechs have to kill banks. I think the alternative scenario is for the fintechs to coexist together with the banks. Banks sort of being these data powerhouses and secure strongholds of consumer money and consumer data, but then fintechs sort of existing on top of that as additional layer and creating some innovative products. For example, open banking is a great example on that. Is that you can connect, for example, multiple different accounts under one hood, as Curve, for example, did, right? And that doesn't say that banks have to sort of die. They can still exist, but the fintechs can create innovative products on top of it. So I can definitely see that traditional banks are going to stay here. I just see that they're going to become slightly different, and there's going to be a lot of fintechs who are going to innovate on top of the banks. So, yeah.
Yeah, I agree with you. I think after PSD2, traditional banks were very defensive because they had to be more flexible, open the market to different players, and now they just see that it's a do or die kind of situation. So they are also adapting and much more flexible than they used to be before.
Yeah, and some banks are embracing the PSD2 as well. I remember recently I shopped on VIALET, and when I reached the payment stage and I wanted to pay through Swedbank for my account, I saw SEB Bank as a payment initiator. And I realized that SEB Bank is essentially aggregating other bank APIs. So it just goes to show that the banks are also embracing that technology, that they're not just silently looking from the side and not doing anything, which I think it's a great way to show that they're also able to innovate. Sort of like, there's a saying that banks cannot innovate. I don't agree with that. I think the banks are also able to innovate.
Yeah, I agree with you, especially here in Lithuania, I would say.
Yeah.
Deividas, what do you think about that? Do you have many banks as clients yourself, for example?
Yeah, we have banks as clients, we have fintechs and other financial companies, and I can say that really fintechs are getting more and more interconnected with each other, because we get more and more requests from one to connect to other and vice versa, and this is becoming more and more relevant for them. And it's really true. But I think not only interconnectivity is making fintechs on top of the banks for today's market, but also the ability to adapt to new technologies, because fintechs are more versatile. We can move to new technology faster, to new infrastructure faster, because for a traditional bank it takes a lot of time and going through various stages of management to get approvals, to change some part of infrastructure, to get some new technology installed, and etc. And this, in many cases, makes this process very slow for traditional banks. And because of that, they fall behind the fintechs, which are more versatile. So I think that interconnectivity is one part, but another part is versatility to adapt new technologies of fintechs, which pushes them ahead of traditional banks. But I also do not agree that traditional banks will be killed. Those who will not adapt, who will not transform themselves, will probably die off, but that will transform, as for example Swedbank, which has the possibility, which gives possibility to their clients to have your credit card in your Apple Wallet, for example. but up to date, Luminor or SEP doesn't have such service for their clients. And that gives Swedbank closer to fintechs, but all the other banks fall behind. That's from my, as a user experience, what I see.
So it's less of a frontal battle. Now it's becoming more of a collaboration.
Yeah.
Everybody trying to find their place somehow in the financial ecosystem and doing what they are the most capable of. Even
if I may add to this discussion, I think what we're seeing, especially at the moment, is we have banks, we have fintechs, but now we see a lot of companies who are not banks, but they're big private companies buying other fintechs. So I think where we're going, especially with this mergers and acquisitions at the moment, is we're going to have at some point some kind of super fintech, which might kill some of those other fintechs. The idea being that I don't think it's just fintechs and the banks who are players in this sort of arena. I think at some point we're going to have some very big players. With the recent acquisitions like Visa, purchasing Currency Cloud, and also one open banking provider. We see, I think, some of those super fintech companies.
Yeah, we see that happening. We see the VC area in Lithuania for fintech being more and more active. There should be Dominikas in the room, maybe. So yeah, we'll take care of purchasing any of our fintech and making it into a monster in 5 years. So yeah, this might be happening indeed. Now, back to our environment, the reason why we grew here in Lithuania as we grew, and maybe the reason why we may see the future as being bright. I wanted to ask you whether at this particular time, but also reflecting on the last few years, whether you see the EU, but more specifically the Lithuanian regulatory environment as something which is more enabling you at the moment, or restricting you, limiting you? How is the feeling? And we will finish with you, Martynas, because you're not neutral here, obviously. Maybe Anna?
Yeah, thank you, Alex. So, being a former employee of the Bank of Lithuania, so I would say that the innovative approach going inside from the regulator is just to be a partner to the banking sector. So from my perspective, it's more enabling you, but at the same time, the regulator cannot just, leave fintechs on their own. They have to someone have to be a watchdog and to look after those, fintechs. Also, which is really great, and thanks to Fintech Hub Lithuania, the initiative to the self-regulation inside the Fintech Hub, which is also very much important to understand the rules of the game and to collaborate inside the fintechs, not to allow someone to act in non-proper way, because this is about reputation. This is about our all prosperity of the whole fintech hub. So so it's both ways. It should be limiting to those who do not act by the rules. On the other hand, it is very enabling, because the reaction, let's say, of the regulator in Lithuania, together with the EU, for sure, regulation is quite quick, and we can, enter with the new products, and we can enter very quickly with the, innovations in this fintech sector.
Thanks. Tadas, you were telling me basically that Yapili is a child of payment deregulation. So how did it come to you? How did PSD2 just sparkle and enable Yapili to build what it is today?
Yeah, I think it's a direct enablement, because the regulation set the framework of how to open up the APIs for the banks, which was previously done through private partnerships and private contracts. It now became open for any fintechs to innovate. So definitely from that perspective, we see it as an enabler of innovation. I think the other question in relation to that is, yes, they set the framework, but the second question is how to sustain that innovation, right? How we make sure that all the banks open up those APIs, and what do we do with the banks who don't open up those APIs, or there are some system issues along the way. So that's, I think, the other question. to what Anna mentioned, I think it comes to the point of, what's the goal of the regulator? One is to foster innovation, but the other was to protect the rights of the consumers. So obviously, when the new regulatory requirement comes in, the fintechs are not happy because they have to change something in their systems. For example, the FX conversion rate, and comparing it to the ECB rate. This is definitely a good transparency initiative for the consumers, but for the fintechs, it means that they have to change something in their feature proposition, in their product offering, in their technology stack. So I think there are ways where regulatory framework might limit innovation, but for a good reason. And I think, as a consumer, I'm definitely happy for that.
Thanks. And Deividas, are you also finding this balance between this enabling and this limiting when you build your solutions?
Yeah, when we build solutions, we see the benefit of being Bank of Lithuania being open to new technologies and new solutions, because that openness gives our players in Lithuanian market the ability to be in front, to be innovative, to use the newest technologies, for example, containerization, which gives fast scalability, increased security, and other values, compared to traditional infrastructures, which, for example, might be virtualized infrastructure. And that openness of the Bank of Lithuania and the European Bank gives that advantage, which is very good and very positive that we see from our side. Yeah.
Thanks. So now, Martynas, having heard that, I think the Bank of Lithuania is recognized, particularly for that, for this healthy balance between this enabling and these limitations to safeguard customers' rights. But how do you make sure to maintain it throughout the years?
I will maybe answer differently a little bit to your question. So basically, yes, so what you're trying to do and try to, in most cases, find the application of this European regulation locally here in the most friendly way for fintechs, but it's maybe not in all cases, but in most cases, at least I hope so. But as I said, by saying that, I said that we are not independent completely, and we need to see what's going on. And in some cases, European regulation, of course, some part of are applicable directly. We cannot make any impact, or we're trying to be involved in discussion process and find some solutions. Sometimes it's not happening as we expected. With this, of course, paying initiation, we were not successful to skip one notification. We were pushing not to have two, but only one. But majority of countries had different opinion. But this is, I mean, what was good last year, and we need to, and I plea to you to take a look what's going on the European level, because we have two strategies published last year by European Central Bank on retail payments, as well it was digital finance strategy by European Commission. And this European Commission strategy is like agenda for a few years, and we will be working on setting up regulation on crypto assets. So this might be interesting for you to see what would be regulated, and then you can more actively move in this area. And other things that are important is this, of course, we're trying to see how to improve cross-currency things, and especially to promote instant payments. There is big push by European Commission to grow up European champions. What we're really lacking, we're lacking pan-European-wide fintechs, as our colleagues were saying, with big techs like we have in USA or in China. So we want to have our own big companies which could stand and compete with globally with others. So therefore, we're trying to, or European Commission also trying to push for different regulations and instant payment type of solutions, including request to pay type or all instant type of services. They will be spreading up. and we are really going to support these things. We would be able, we will try to bring this infrastructural support for our community and to be connected, so you could be able to also not to provide such type of services. So this would be my answer.
Thanks. Yeah, back on crypto very quickly. I think a lot of people are waiting for clarity, more clarity on the crypto regulatory environment. The worst enemy of market participants is the lack of clarity, so hopefully that will help us on that. I'm personally very curious to see how this will play together with the central bank digital currency and GovCoins. So let's see. I guess we still have a few years to see where we will be. So we spoke about the trends, the new trends that have emerged during the pandemics, the new habits of the people in the fintech, but elsewhere as well, that have led to a surge in the use of payment services remotely, of financial services differently. What are the new trends that you see emerging yourself, either within your organization, with your clients, around you, within the fintech ecosystem? I mean, Deividas, if we start with you.
Yeah, from our clients, we see more and more of them adapting containerization and DevOps tools, because they start to see the real value of DevOps. They start to see the real value of containerization. One of these values is scalability, which compared to traditional infrastructure can be up to 50, 60 times faster. For example, if you try to scale your infrastructure in virtual machine level, it might take up to 1 hour. And compared to containerization, the system expands itself, scales itself in a matter of minutes. So it's a big difference when the infrastructure is big and you have a lot of very fast growth, and it's not prognosed from before. You do not. Sometimes you do not know when the increase in number of users will come to your company, to your fintech, and you might not be prepared. And when you need to do everything by yourself with your bare hands to scale your infrastructure, it takes a lot of time and gives a lot of pressure. But when you have containerized infrastructure, it scales automatically, and you have some part of machine learning that is according to some rules when it needs to scale and when it doesn't need to scale, and it's just, for example, a fault of some kind of. And another important thing is the security level, because we see nowadays breaches in some global platforms like LinkedIn, Facebook, and etc. And that tools which DevOps brings, for example, vulnerability testing of all new containers that are launched, gives an increased security, which nowadays is very relevant and very hot topic. So yeah, the adaptation of containerization and DevOps tools is the to-date trend, I would say, from our client experience and from the whole market, not only Lithuanian, but European and worldwide market experience.
Thanks. Well, managed scalability sounds like a dream. So yeah. Do you see anything specific, Tadas, within your industry, within your area?
I think just to continue on that data element, as companies started to gather so much data, they have to make sense out of it and put it into use. So I definitely agree that AI and specifically machine learning algorithms are helping to make sense out of that data, identify certain patterns and put it into action, or just simply, to make lives easier at the company level, and apply machine learning algorithms to automate certain solutions. I think in open banking perspective, open banking, transactional data of the consumer is enabling better lending decisions. So for example, people who before didn't have, for example, credit history, through open banking and machine learning algorithms, they can now get access to that necessary credit. For example, previously it was necessary for you to have some credit history to get a good lending decision. But now we can look at, for example, regular repayments for certain utilities. For example, you paying for your Netflix or you paying for your Spotify shows that you are able to repay your obligations, even though it's not a direct credit, it's not a mortgage, but it still shows that you're able to repay. So you can use that type of data from your transactional information in your bank to make a lending decision. So I think this, using data in interesting and new innovative ways is that trend that we're seeing at the moment.
Nice. And you still choose whether you want to share it or not, which is also very important.
Absolutely. That comes back, to that regulations and how they're limiting or enabling innovation. So I definitely think this is where limiting innovation is kind of a good thing because of that privacy concerns. I think another interesting trend that we can notice in the fintech area is the surge of the investment apps as people started to save a lot of money and started to invest the money somewhere. And especially in those investment apps, we can see some interesting developments like investment linked to the social elements. For example, what happened with Robinhood and how people sort of create those communities and start investing in certain specific stocks, or where they, for example, on certain platforms you can select to follow certain people and sort of mimic their investment decisions. So I think there are some interesting developments there because even though we spend a lot of time at home now, we still want that societal sort of feeling and being connected. So yeah, a lot of different trends. And I think, yeah, as I mentioned before, these upcoming 2 years are going to be very interesting in fintech.
All right, so I'm not asking you if you followed Elon Musk advice. Anna, have you noticed any specific trends yourself, or can you relate with what we just discussed before?
Yes, for sure. I agree that AI and ML are just, the trend of the trends right now, and the robotics usage in apps and in other, solutions will be more and more frequent, and we're going to get used to that. But also, I would say one of the trends is that the healthiness of the financial systems in many countries become very much political issue, because yes, there are very nice trends, but apart from those very nice trends, we can see as a trend a lot of fraud, which is happening also and related to the online system. So it again comes to either to romantic fraud or investment fraud or fraud related to the fake platforms where you may or may not invest into crypto or other kind of assets, which I agree people have a lot of free money right now to invest somewhere, and there is a lot of the opposite side where you cannot sometimes properly find the real assets to invest there. So in that case, I would come again to that social responsibility and the responsibility of the state itself, where the healthiness of the system becomes kind of political question.
Thanks. So, Martynas, we're going to turn to you now. We've heard about security, the growing usage of online services, notably for investment. It's getting crazy. Indeed, security when it comes to accessing your financial-related data. How do you deal with that? How do you monitor, for example, in Lithuania, the market for new apps that are proposing investment service? How do you check whether these are indeed in line with the consumer protection requirement, that they don't harm consumer?
Alex, again, you ask a very wide and deep question.
Yes.
Unfortunately, I will not be able to answer because our colleagues from a different part of central bank are responsible for that. But I will maybe continue what Anna said and turn back to the innovation part. What was very interesting was that during this strange time period, the central banks as a community, they also started to talk more about innovation. And we have two different work streams, one internal of the Eurosystem ones, and we also thinking how to use AI or text recognition or other techniques to create some solutions, innovative solutions for financial services or for some reporting services between market participants and us as a central bank. So this is one thing. It's another thing is global one at BIS, Bank of International Settlement. We have innovation network was created and we are also working globally on how to employ these new technologies, blockchain and others, to cope with our needs as central banks, but as well how to solve this cross-currency thing, cross-border payments. This is very huge topic, and we have a dedicated body, Financial Stability Board under G20, which is also last year published a big report three reports series actually, and now we'll be moving together different institutions how to try to solve these obstacles. And what is very maybe good to say that our board member Marius Jurgilas, he is chairing one of these work streams under BIS. So he is sharing this central bank digital currency work stream. So basically, our colleagues, we're gathering some knowledge what's going on globally for this topic, and we'll see what we can apply here locally. So, but coming back to your topic, I believe our colleagues from our supervisory, Yekaterina would and Ruta would answer better to your question. And what we really see, what our supervisory colleagues do, we trying to openly do these inspections, and we are informing in advance on their visits.
Thanks. So thank you, everybody. It's already almost an hour, so I guess we can now turn to the audience to open the discussion a little bit. I don't see any question online, so if you have any question here, just raise your hand. Otherwise, we have a few more here. Vaiva, push them.
Hello, my name is Vladimir Kolesozovas. I am General Manager for B4B Payments Europe. Maybe it's a question, maybe it's about to understand your perception as well. Relatively, well, fintechs have started growing here relatively recently. So far, Lithuania at least has been dominated by far by Scandinavian banks with a very heavy market concentration. And so we have been for many years in a situation too big to fail. You understand what I mean. And perhaps for financial stability of the country, it's very healthy when the market is not that dominated by very big players. So it just reduces risk. It's like a nation is not putting all eggs into one basket, so to say. So from this angle, at least I personally, I see that growing fintech sector is very important for the stability of the country and for stability of European Union as such. Unfortunately, over the course of years, we faced a situation that many big players and many politicians looked at our sector like we're taking what big banks are not very happy to take. So it's higher risk customers. And looking forward, and because it's frankly it's not very easy to start. You have to be you have to have significant advantage over traditional players to get market share easily, right? So looking forward, how do you foresee the development? Do you see financial technology companies will grow into all-in-one, or will stay more niche providers? And overall, do you see that the dominance of traditional players will go down and down?
Who would like to take that?
It was addressed to me. I think so. Somehow. So I will try to answer this one. I mean, you see and you understand that what we did with opening SEPA payment market, it was to increase competition. So financial stability is one thing, and what we wanted to increase competition in payment service sector. So this was, we somehow succeeded. But this does not change much, unfortunately, let's say, the concentration of the banking sector. But I believe maybe we need more time, and what and you see recently, but we have now a new type of specialized banking licenses, and this type of entities now, this type of licenses are issued recently, and quite a few of them, and we need to give more time to grow up and start to compete. This is a little bit maybe from different. My thinking is like if you want to compete with bank, you somehow need to become bank. Of course, different models. I mean, as I said, for platformization, we can have like a combination of fintechs, which have their own strong niche, and they coming together and they offering services which are offered like from one commercial bank, so you can then compete, but as a community, as a group of fintechs. Otherwise, you need to become a bank, and because this is not only license, also allows you to do certain things or allows you to provide certain type of services. So this is goes one with others, so not one without others. So therefore, if what is very good to do is to work and compete, you don't need to have you need to find your niche, you need to find your strong aspects, arguments, and try to lure not only very risky but non-risky clients. This is the direction I believe you should try to move. On the other hand, unfortunately, during the last years, although we pushed for this fintech competition direction, some banks merged, and this merging of the banks we also increase this concentration. What is good, but at least I understand from our board that we would be not much willing to allow so easily anymore in the future to confirm and agree with further concentration of the commercial banks. So this is good, but we would, from this point of view, might be not willing very easily to give okay when like Swedbank is taking over on the Danske Bank client portfolio. So at least I hope so, and this would allow us a little bit to have lesser concentration in financial services.
Yeah.
Maybe
Go on.
I just wanted to add that when the concept of the EMI was thought of or created in the regulatory, let's say speaking about EU, it was also thought of the financial inclusion. And this financial inclusion means that a lot of private individuals and the services were out of the financial services, and that's why they were pushed into the kind of gray area. And by creating that fintech concept, you also have to understand that, yes, you take those clients, but they are not necessarily, how to say, high risk. They are risky, but the concept is like that. You have to accept that they exist in the market, like crypto. Instead of closing the eyes that this is a highly risky assets, you know, the regulator goes into the regulating of these assets in order to make it structural, understandable, and to mitigate risks there. So from my perspective, I would like to see the market of fintech like a boutique type, where you take some niche and you know pretty well this niche and you are super good at this product and you can, you know, mitigate risks of this product. And if you do that very well, there is no need then, you know, to further concentration. You just do your job. Like, you know, in the retail, there is much better to buy milk from the milk producer, which is, you know, do it with all love put in this milk. So the same as to all other sectors. So if you know your product very well and you do it with all your energy, so you create something excellent.
Yeah, and I would like to add that currently we have some kind of change of generation, because older people are more conservative and used to traditional banks, big structures, big corporates, and they choose their services. But the new generation of users, they compare the services, the service level, the benefits they get from fintechs, and they more frequently choose fintechs versus traditional banks. And I think that in the near future, the new generation will choose fintech companies more and more frequently than traditional banks. That's from my opinion.
And EMIs themselves
Yes,
are more
yes, of
mature
course.
as well. I recall at the beginning, a few years ago, maybe 4 years ago,
Yeah.
everybody was trying to look for its role within the fintech ecosystem. What clients are we going to target? Let's take them all that those that are de-risked by the banks. Let's try to catch them all. Now there is this level of specialization indeed, and I love that at the moment, which makes that fintechs know their customer very well. Because at the end of the day, it's about that. It's about knowing your end user, your customer very well, acknowledging that there is an extra level of risk, but just knowing how to deal with it. Banks, and that, in my opinion, that gets back to what we've said before, they are not as agile and rapid. When they had this big slap from the regulator, it still goes on, but they just realized that they were not having the resources to deal with this type of client. So instead of finding a good approach, adapt to still manage to serve this client, they said, okay, we just get rid of them. And bam, we had this flow of high-risk client on the market, which we had to deal with. At the end of the day, I think the adaptation went on rather well with the help of the central bank, sometimes the hard way as well, we know it, but that's what it takes to get maturity. And as to consolidation, I would say it's very interesting to look at what's happening right now. There has never been so much money in the fintech ecosystem. There is some kind of consolidation happening, but also we somehow, at least that's what it looks like to me, keep on this level of specialization. You won't see a company buying whatever company. It still is very much in line with their strategical direction, and they don't just try to grow, in my opinion, and that is somehow relieving to me.
Yeah, and fintechs also bring their service closer to their end clients compared to the traditional banks, which is a big value in my opinion.
Yes, indeed. Let's see where we will be in 2 years from now. Any other questions? Yes.
Saulius Rajunčius, I'm the board member of this famous, well-regarded and eminent FinTech Appellate Association. Also, as my colleague Vladimiras, we at the St. Joe sit on very conventional banking system background. And I'd like to put some remarks because really when it comes, say, when we're talking about a fintech, it's really about a financial technology. It can be attached whether to the wealth management, the asset management, the pension funds, insurance, and stuff like this. I would rather prefer to focus, say, onto, say, different situations. I don't believe that we really can define it, say, the patterns of competition between the incumbent commercial banks and the electronic money institutions. It's totally different world. The first, MEI is really about very, how to say, flexible, open, even without the frontiers, payment market. Talking about the commercial banks, they really are involved in the very, how to say, very down to the earth and supposed to be, how to say, with a lot of things on the ground industries, like for instance, the loans, the retail loans, leasing, or especially, say, the mortgage loans. It's a totally different, you know. They have the different structure behind, because really to give the retail loans or even to give, say, the real estate loans, say the mortgage loans, you really need to be very down to the earth. Say, why not competitors? Say, I would rather prefer to talk about a different approach towards the payments, you know, where we can really be quite big challengers to the incumbent banks. That's only one, say, the area where we can create competition, we can fill competition. I don't think that there is no need to talk about a general competition with incumbent banks. How we're going to compete, say, in the markets like the pension funds, the banking, insurance, and especially in stuff like the giving credits, especially the mortgage credits. We see the very narrow, say, the situation related to the payments market. And that's really where we can find a lot of advantages, say. Here we don't need to be, say, very down to the earth, say, or grounded with a lot of stuff. We can be flexible. And even, say, we really can enjoy the new patterns like the internet platforms, you know. It wasn't the case like 10, 15 years ago. And we are very good prepared. We are really very well regarded to start serving this, the new the pattern of doing trade, you know. But, you know, to talk about the very broad competition with commercial banks, I think it doesn't make sense, you know. It's better to focus on the very narrow, where we have real advantages. And I'm so sure, even moreover, I really would put on the table this idea that maybe some incumbent banks, they really can abandon the payments market. It really can start focusing only what it's really regarded as the real, say, the commercial classical banking, like giving the loans. There can be a lot of, say, the new pioneers. And even now we see, and even maybe Martynas can tell more about, is the payment sending directive of European Union, that maybe they're going to be in future no separation, say, between the licenses. As far as you handle the license that allow you to provide with the payment services, say it could be whether electronic money institution or credit institution license, you really can get the same kind of, say, advantages. I would say in the future they're going to be competition in the very narrow payments market, and for sure we can really rise a lot of the pioneers, a lot of the rising stars, and we can easily compete in this area. But it's not about competing in the very broad terms, general terms with the commercial banks in the future. Thank you.
Thanks. So it's all about finding your place indeed. How many people, around me, I see a lot of people using their bank to basically fund their multiple wallets. So to add money on their wallet, they're using their bank. But when you ask them why they are using it otherwise, a few of them might have mortgages, but other than that, indeed, it's changing a lot. Anything to add on that?
I will react to Solus. What I was saying about digital finance strategy by European Commission. So non-bank access, it's also one of the topics in this agenda. So, we are looking, or we involved in, let's say, searching for the regulation which could a little bit open Europe-wide with non-bank access to different type of financial infrastructures. So this is on the agenda, and this is why I'm saying we should take a look what is in it, and on our hand we need to find the arguments, and if I would request you or invite you to take part actively in this, and sometimes the European Commission also making public consultations, so this is important to follow not only us but also European Commission, and sometimes to give to them direct feedback, so we would see that there is really big need to support this. Thank you.
Thanks. We have a question online from Jonas, who is asking us how fintechs are fighting financial frauds, and what are the trends in this area. Any of you feels like taking that? It's broad as well, but
I think one of the ways, again, mentioning on the machine learning algorithms, there are, I think, interesting now technologies in a way to detect certain patterns which are not detectable by individuals. We usually speak about supervised machine learning, but where we have clear input and clear output, and we just teach an algorithm how to detect certain things and how to say that this is fraud or this is not fraud. But the problem is that we don't have that many, don't have that much data about fraud, which we could teach the algorithms correctly. So I think where unsupervised learning might come really interesting is where you don't tell the algorithm what to look for, you just ask him to look for certain patterns. And that's where I think machine learning can come in and show those specific patterns, which would then show those patterns to, I don't know, a compliance or a fraud specialist, and they can say, oh, this is an interesting sort of pattern we haven't detected ourselves before. And on top of it, I think there's a lot of intelligent solutions of how to gather, information about device fingerprint, about individual itself, about payment method. So the more data we have and the better algorithms we have, I think the more able we are to protect ourselves against fraud. If we talk about credit card fraud, if we talk about romance scams or social engineering, that's the whole different story. I think that's where the education has to come in, either from, I don't know, Bank of Lithuania or some other authorities, and educate people on how to protect themselves.
I think there is a lot to do on the top of what you mentioned, indeed. In learning as well from the AML CFT world, which itself before learned from the anti-fraud world about the behavioral pattern rather than the data. So we have a lot of data. In a lot of cases, we don't even know what to do anymore with it. And what we observe is that we also have a lot more data, or at least a lot more information as to how our end user are behaving using our services. how long do they spend to perform a transaction? How many interaction with their keyboard are they performing to do one transaction? How many times they reconnect? What is the language of the device they are using? Is this language matching the language that they are interacting with us? And all of that, which seems informal at the beginning, can tell you a lot as to whether you might be dealing with the person you think you have in front of you or no. And a lot more players are using that, this behavioral pattern rather than, as you say, algorithm, which at the end of the day are only as good as those who set them up.
Exactly.
And I think it's helping a lot. And I think we're starting to understand more on that, on the AML CFT point of view, on the anti-fraud point of view. And we have a lot to learn in this regard. Anything to add?
Yeah, I think there's another area of where machine learning is also working on the side of the fraudsters, where, for example, they create synthetic photos or deepfake videos, which is a whole new level of, for financial institutions to work on, especially when we talk about remote identity verification. Some of the deepfake videos that they're now created in the market, when you compare them, to the fraud detection algorithms, they're not able to detect that. And even just seeing those videos, it's kind of scary to see. I don't know if you saw that Tom Cruise video, which was circulating on TikTok. It's just insane to see how good that deepfake is. So I think the technology is working on both ways. It's helping the companies to detect fraud, but it's also helping fraudsters to create very interesting ways of how to fool companies. But as in compliance, it's a never-ending war. It never stops. It just gets more interesting.
And here I would like to add, and what you said, and it's very important that every institution, irrespectively if it is PI, MI, or a commercial bank or central bank, we should try to educate our end users, each of us. I mean, not only a central bank, I mean, each of us. Right? This would spread this message more strongly. Yeah.
Thanks. We have a question specifically for you, Tadas, for Yapili. PSD2 is effective from 2021, January 4th. What is your view as third-party provider on actual compliance readiness of ISP/SPs in Lithuania?
Can you repeat the question? It was.
What's your view as a third-party provider yourself on the actual compliance readiness of the ISP/SPs in Lithuania? Do you think they will be? Do you think they actually are ready since the 1st on January 2021? Do you think there are a lot of companies that are that have been missing out, that are delaying their compliance with this requirement?
So the way to approach it is, I think, yes, the biggest players are already, they had to be ready for that. And we already have solutions, as I mentioned, other banks aggregating APIs of different types of banks and selling it as a solution. So we already have the biggest market participants sort of ready for that. And it comes also from, who have accounts in these institutions. I think the way to approach it is we have to reach a really high percentage in specific markets of how many bank accounts are covered by those institutions. Because we have a lot of EMIs, that don't maybe have that many customers that would be required to access through API. So I think the readiness is already on a pretty high level.
It's a very good point, actually. I think this is something that everybody, when I mean everybody, I mean the market participants, but also the supervisor are realizing that maybe there is a need for even more risk-based approach.
Yeah.
Because there are really players for whom it makes no to little sense to actually be in line with that because, well, they just don't have the risk it will pose.
Yeah, and just add on that, I think there's one thing to just have that basic API ready. There's a whole different story of how different banks interpret it. I remember I was reading the feasibility study that was created by Bank of Lithuania of using the open banking APIs to get the safeguarding data. And what they realized is that different banks categorize the bank accounts differently. Payment, so essentially PSD2 is only on the payment accounts. And safeguarding accounts are not categorized as payment accounts by a lot of banks. So this is where, we have the same regulation, but the banks interpret it in a different way. And that's where even from Bank of Lithuania perspective, if those accounts would be categorized as payment accounts, they would be able to connect easily to, the Fintech accounts and get that data, obviously with their consent. But so this is a good example in showing that how banks are interpreting the regulation differently. So it's one thing to say that, yes, they're ready on the basic level, but when we start talking about specific feature, specific product, it's a little bit different story. And that's where I said, that's where I think we're looking to regulators to ensure that they not only create the framework, but they also help us to sustain that innovation and, sort of talking to the banks and showing, what's the best way to essentially implement it.
And what can be done with it, yeah.
Exactly.
Thanks. Do we have any other questions? All right, I think we can call it a day then. Thanks a lot for your participation for this first attempt. So far it was rather successful, I will say. Nobody died, so it's quite a good news. Thank you for coming, and hopefully see you very soon. We've seen it works, we're all here, happy, so let's make it another time soon, hopefully. And thank you for attending online as well. See you soon. Bye, thanks.
Thank you.
Bye. Bye.